Good morning, everybody. Happy Monday and happy, I guess, early February. So we've had ourselves a hell of a week last week. The Fed gave us some, wishy-washy answers and some non-committal sort of sort of information on where we're going with rates. But we already kind of knew that we weren't going to see anything for March. Uh, but this sort of, confirms, or at least last week, what we got for information confirms that, it's probably a 95% chance here that we won't see any sort of rate cut for March. They're also talking about June. So, with all that being said, we can kind of see here that we have, just looking at the 10-year with, what's really been going on the last couple of days. We've actually had a very, very large move. And if we're talking about just bonds in general, we went from, there's really only a couple days here. We had about almost a 9% move, and the corresponding move back up, which is about 8.15%. That's huge, especially when it comes to bonds. Like every tick is like, 20 bucks. It's ridiculous here with the futures. But the reality here is that we might be seeing more consolidation in this zone, like an ABC up here. I was kind of thinking we were seeing that before, but we retraced a lot lower than I thought we were going to. So we had been about right here, right around the 3.9 level, and I wasn't really thinking we were going to retrace too much lower, but of course, hindsight's 2020. So what we're seeing now here is it's either an ABC for a correction, or at least like a wave four sort of correction here. And I'll zoom out a little bit because I think there's some good context here. We can see this wave one, two, and a large three, and we can also see the wave three subdivided here into a five wave impulse, which is important. That's typically what we use for gauging or for gauging this sort of thing here, what we could see for continuation. We could also see something like this, where we have like a wave four, and it just keeps extending. Like we might hit this 0.382 level, so it's about 4.26, and we might reject down here, but it seems like we're at least building a base. So if we're looking at the RSI here down at the bottom, we still have some oversold indicators, and then it went right back up to overbought. So I do think here that with all the situation going on with the Fed and the Treasury, I don't think we'll see really like a race to the moon here up for rates, but I do think that we are building some sort of support here. And even if we do something like a triangle, like a something along these lines here, that's perfectly okay because triangles still resolve themselves to the downside, at least the vast majority of the time. We could be faked out, but we still do have a relatively large position here with TMB. So now it's back in the green where it was deep in the red only a few days ago. So I just wanted to reiterate that having patience is probably the best trading strategy right now. So, all right, so that's the 10-year. Let's take a look at the dollar. Dollar is screaming up and finally broke out of this um, consolidation pattern here. We just hit this target one that's been on the chart here for quite some time. Potentially, we might see some sort of reversal, something like this to back test the upper trend line and head back up. But I'm just not sure yet. We'll have to see because the 10-year and the dollar typically rise and fall together. But long story short here, the dollar is going up, 10 years going up, then most likely they will continue to rise. Let's take a look at things like gold. Gold's been a little weird. It seems like some days we have some pretty large moves in gold, some days we don't. But what I am seeing here is other than this spike that we saw, you can make the argument that we have a head and shoulders sort of pattern. And I think that we'll see some lower levels here, so like this target one, this 1988, around that, 1988, 85, something like that. We also have some support down here at this 1976, but I do think that we'll see some good levels here to exit some of these shorts. I was thinking about adding some more shorts up top here, but I didn't really want to get trapped in case gold went up higher. That was also when we were seeing those large moves down with the yield. So I just want to be a little bit careful and not overcommit to some of our position sizing, at least for the fund. I mean, you may choose to do which you wish, but at least from a gold perspective here, it does seem like, and let's zoom out here, get some more context. Um, we are we are kind of moving around this range, and actually, let me zoom out a little bit more. So I still think here long term we're doing you know long term I do think that we're getting close to the end of this flag, and I think that we're going to see a breakout up here, especially when the inflation narrative comes back to the forefront here. We've already seen some decently hot GDP. We've seen some high jobs growth. Really, just flipping that. Inflation's under control and the economy's, sort of slowing down. The Fed's trying to, thread the needle here. I really don't think that that's the case. I think that we're seeing, really just kind of like a gyration right now of narratives changing, and that can typically lead to some sort of consolidations. So let's look at gold. Or sorry, not gold. We're already on gold. Um, but after, sorry, let me just finish the thought here. So after we head back down here, I still don't know where the floor is going to hit for support, but in this particular range, we do have a decent amount of levels of support here. So target one, target two, we're still going to go long on gold. So it just depends on where we want to do that, but the short trade I think is going to be relatively limited in the upcoming future here. So let's go back to the hour and let's pull up oil. So oil, I think is a good long right here. I think that we might see, instead of this ABC, I think we actually might see more of a longer term like flag up, where yes, it could resolve to the downside here, but we could still get ourselves a nice scoop to the upside. So we could see something along these lines where we see this sort of we could see a little bit higher, or really just like a retracement back to where we were before, around this, 70, 79.50 level, maybe slightly higher, set like maybe 79, 78. At least that's when we're going to start to hit some sort of resistance here. But the long story short with oil is that we did see some news yesterday or last week that was not very favorable, but I also do see a pretty clear ABC pattern here. And when we back it up, I'm also seeing the same here. So this just tells me that we're making a flag, and there's really nothing, you know, don't overthink it, I guess you could say, when it comes to chart patterns. We could see, typically we see like five of these ABCs within the pattern, and I just think that we'll see, something just to be realistic, something that we'll see just probably back in the 80s again before we see anything resolve to the downside. I think that we will probably need some sort of shock, like economic shock. But we did have a ton of volume here, a couple days ago, like on Friday, and just wanted to be realistic about it. So, all right, let's take a look at our equities. Equities are just pissing people off. There's really no other way to say it. Uh, there's really, you see these things with these just mania markets right now, where everything is just going up and up and up. And I mean, we saw here, let's just take a quick little break here and look at the meta chart. Meta, like, come on, guys, that's not realistic. We're seeing just massive moves to the upside here, and even if you do have an earnings beat, like that was a 20% move. 20%, like that's many many billions of dollars of market cap that was added. And if you see something like Nvidia, this is very clearly, oh, I guess I got some jokes here before, but this is very clearly a blow off top. There is no other way to put it. And I mean, sure, it could keep going up higher and higher, but aren't you guys starting to get the feeling that this is getting a little manic, little mania here? Um, so long story short, I think if you're looking at some of these mega cap stocks, they're all going in the moon, and I don't think it's sustainable. But still, you have to remain solvent first. So uh, technically, a lot of these mega caps have made their wave fives, and now they're extending their wave fives. So I mean, we can clearly see with Apple here, we've got a new high, right around this 200 mark. We're looking at something like Amazon. This is a pretty clear. I haven't charted this one in a bit, um, but we're looking at something like this. We got some pretty clear wave fives and extensions here. Meta, who knows? Who knows the hell's going on with these guys? Just up. That's it. But really, the way that we want to try to protect ourselves here is understanding that we are in a wave five, and yes, we could extend further and further, but the reality is here for the indexes, and I'll pull up ES here. Sorry, I know I'm clicking around a lot, but when we're looking at these indexes, sorry, we do see these pretty clear wave fours, and we may see something like an irregular. Now I have that on the Nasdaq chart, but I still wanted to show that we have this. We do have these like the structure that's going up here, and we have some pretty close levels here. I mean, I think ES made it to maybe 4998 last. Wait, let's see here. Super close to a high. Ridiculously close. I mean, they'll hit it, but I think we need to do probably a small pullback here. I can see like another little small B wave. Plus, also we're just kind of grinding around here, so you'll probably see some distribution and some position adjustments. But these are major levels, and psychologically, if we're looking at these like on a longer term scale, I think they're actually pretty extended. So if we're looking at this entire structure from the entire way up here, we see that we definitely had a breakout. Uh, yeah, sorry, it doesn't look right. But we did have a breakout to the upside, and we do see some pretty crazy extension up here. And the math kind of shakes out with these, with these drawings that you can see 5,000, or if we're looking at something like Nasdaq, this 1,800 target I think is realistic. I'll show you the irregular thought here in a second, but um, when we're looking at something like this, we could see this extension here. So like the 17,850, we could see slightly higher, but really, I mean, 1,800 is a likely target here, especially if we have this five-way structure. But I do think it's possible that we might get a shakeout where this is where I wanted to show you this sort of this sort of situation here, this expanded or irregular flat move. So right now what we've seen is we haven't really seen a breach, or at least a significant breach yet, but you can typically see these in you know markets that have pretty strong bull trends, are these sort of irregular moves. Now I think that we could see something like this, and we might see like a five wave down to try to shake out some weak hands, um, and make a lower low than what we had a couple days ago. But just keeping this in mind here, this structure, this 335, as we go into the chart a little bit more. I promise I won't spend too much time on this to nerd down on the charts, but just to be realistic about this, this is what this looks like on a chart. So we could see this weakness developing, um, and we could see maybe like a back test of this lower trend line here. And if we look at this, we actually didn't see this. This is what fooled me last week, is that we didn't see any continuation of the selling past this 0.382, and that's a pretty clear red flag that we're not actually going to see some significant selling. So I was fooled with this, I'll be honest. I thought we were going to hit this lower trend line and give it another test. Because if you can see here, take a look behind here, we got two connection points and a pretty clear wave four, but we did have a little bit more room to go here. But again, since it's such a crazy bull market, I just got to take it day by day here when we're looking at the charts. So long story short, I think that we might see something like this if we hit like a higher target. Now, if we look at something like ES or the S&P 500 here, this one's a little bit more clear. This one's actually, I think, a little more easy to read, I guess you could say. We did have this bit of a blow off top here. I don't expect it to get really, much past this 5,000 level. But I've been wrong before here. But we're still seeing some selling this morning. If not just a little bit, just some sort of consolidation. We are starting to see some pretty high volume trade hands here, so I would like to see some sort of relief from this sort of blow off top here. But we still just need to be honest with ourselves here while we're trading. If we do see anything higher than this like 17,800 level, it's probably a good idea to hedge long. Now, again, I still want to be careful because it's a lot. I do think that we're really, really close to a top here, and it might take some time, but I still think that we might see some sort of consolidation around this zone as all the masters of the financial universe here get to unload some shares and shake out some of the other weak hands. So that's the view on equities. Let's take a look at the Dow. The Dow is just kind of doing its own little thing here. This does qualify for an irregular, but the more and more that I'm looking at this here, the more it actually looks like a five-way structure. But we've already breached the high here, so I think we might actually be seeing something different. And I don't really have confidence yet on what that would be, but I do think that we're getting pretty close here to a top as well. Same thing with ERDI. ERDI really just looks like it's a little sick. So if we look at, I actually wanted to show you guys this as we back it up. So these patterns are relatively reliable. We could see these, we call them like an overthrow. So we see an overthrow to the downside, and typically we see a commensurate overthrow to the upside, or vice versa. We didn't really see all that to the upside. We didn't see like an equal move, but typically they are equal moves. But we probably would have seen that already. Now, if we're looking more in this range here, I do think that we'll see some support here, maybe in the 18, between this like 1870 some level and the 1833 level. I don't typically like to trade ERDI because it's it's kind of it just trades weird. it's it's hard to put your finger on it with the price action sometimes. Even though if you have a relatively clear pattern like this, it's still a little difficult to put your finger on it. But anyways, I think that we'll see something like this. But typically, ERDI does lead the other indexes. So if we just keep an eye on this, we can see that we still see some weakness with like regional banks and some of those other rate sensitive sort of businesses, which is why I believe that ERDI's not really doing so well. But again, we are seeing some massive volume here, and that's important to know. Um, like for example, we saw this back in December. We hit some trend lines. We had some pretty decent rejection here. After we climbed up a little bit more, but you still see a lot of volume trading hands. And what's also important to see is you do have this divergence where volume's going down. If we zoom in here, volume was going down, all through the back half of December, and we still had an overbought indicator. So the fact that we're starting to see some selling, and now that if we're looking at it at the day level, we're starting to see some top wicks here with a lot of this daily volume. So I do think that as the rates increase here, you're going to see a lot of problems with ERDI. But I'm not shorting it. I'm- we're already a little heavy short, but the reality here is that markets are looking a little heavy. There's really only a handful of stocks that are driving this, and we're starting to see some divergences. So that's it for now. Let's see how the week develops here. But I do think that overall, we might see some sort of relief here. We actually went short, not too um, I guess not too much lower than where we saw some consolidation. So if we do see some sort of decent selling, like if we see let's say if it even goes up to this 1800 level, we could see something like this. This is actually a normal sort of correction, and the short position should be profitable. If we just do some measuring, let's say it even hits that 1800. I mean, that's only 9%. That's more than reasonable. If we're pulling back here and we're looking at the larger structure for Nasdaq here, even if we back tested this trend line, which we will eventually, that's a 15% move down. That's crazy, but still, we went short up here, and now we're kind of nursing those shorts here. And if we also look at ES, the shorts are, I'd say, probably around the same place here. I think that fooled a lot of people here with these sort of structures. We thinking they're tops, but then it just keeps extending higher, and that's it's really a good way to hunt some liquidity. But yeah, so I guess keep the faith with the shorts. It's really just something that we need to bide our time on here. I think that yes, we will have likely some more upside here, or at least we could. There's definitely a case for it, considering how crazy we've been lately. But I think that to kind of finish here with the 10-year, I mean, we're already screaming up, and this is still a huge move in bonds. So I think that we'll continue to see a move like this, and we might have a pretty violent reaction in equities here, especially if we get past this 4.261 level. I think that we'll see some pretty crazy reactions. So, all right, everybody, thanks for watching, listening, and good luck this week.